So we got a triple 90% down day on Friday. What exactly is that, and what does that mean going forward? Hey, this is Arthur Hill, Chief Technical Strategist here at TrendInvestorPro.com. And today we're going to look at the 90% down day we had in the S&P 500, S&P MidCap 400, and S&P SmallCap 600. I'll show you how to calculate this indicator, how to chart it, and we'll look at some previous signals to show what happened after these triggered. Let's hit the charts. So let's start out with how we want to calculate advance decline percent. It's based, of course, upon net advances, which is based on advances and declines. So there are a couple of ways you can find out the number of advancers. You can run a basic scan here. Here I'm just looking for the S&P 500 stocks, and I want the rate of change to be above 0. And so when I run that scan, I get the results here. And there you can see 30 results. So 30 stocks were up on Friday, which means 470 were down. Now this is an interesting scan to run in and of itself because it shows you the stocks that actually held up on Friday when we had all that selling pressure. So we can see CBOE was up. Of course, Amazon had the big gap up. Colgate-Palmolive, a consumer staple. Disney has an interesting chart, which I'll show you in a minute. IBM, not sure about that one. And then you can see the rest of the ones, Pfizer, Regeneron, AT&T, and Verizon Communication Services. And you can even do a little sort here. We can sort by sector, and there you can see the sectors that were representative. A lot of utilities there moving higher on Friday. Now, the other way that we can do that is I use Amy Broker as well. I use that for my back testing. And what I did was I just ran a scan to see the rate of change was above 0, and 30 stocks came back in the results. So that confirms what we see on stock charts. And then if you look at Disney, it's quite interesting on the price chart because what I'm seeing here is basically, we had this kind of falling wedge and we had a breakout. So that was a nice surge. And, Disney was setting up nicely at this point. But then the market got hit and Disney fell as well. I would have liked to have seen a breakout there and a continuation higher, but it didn't happen. But Disney's still at an interesting juncture because you can see that this resistance level turns into support. You got a little gap. And you're oversold here. RSI is below 30. This is 14-day RSI. Stochastic was below 20, also oversold. So you have a double oversold reading there, and you're at a potential support. You had a nice, what looks like a bullish engulfing on Thursday and a small gain on Friday. So Disney is one to be interested in possibly next week and beyond. But now let's get back to this AD percent issue. So here we have the S&P 500 in the top window. And there you can see we've got advances used as an up-down pair. That's what I'm plotting as the indicator. And you can see the symbol there on the left-hand side. So basically here we see 470 decliners minus 470. And there are the 30 advancers, which we confirmed with those scans. And I've got these lines here at plus 450, because when you hit plus 450, that means 90% of stocks advance within the S&P 500. When you hit minus 450, that means 90% decline. And that's what happened on Friday. We exceeded that minus 450 level, and that is a very lopsided number of declines. Pretty much everything fell. And so the next step is net advances, and that's just advances minus declines. And so then you get a number that is above or below, say above 400 means 80% or more of stocks advanced, and below minus 400, which is the lower line there, means 80% or more of stocks declined. And so this kind of, levels it out and shows you the net advances. And then we take this as a percentage of the total number of issues in the S&P 500. And so the line here is at minus 80% and plus 80%. So you can see in August, we're getting some plus 80% readings there. And then we got some October minus 80%. And now we've got another minus 80% or below minus 80%, basically, which shows you a lot of selling pressure. And so what I do is I look at this indicator for large caps, small caps, and mid caps, and we get a triple reading below minus 80%. That shows a lot of selling pressure, and that usually means we're heading for some sort of a corrective period. So let's see what the previous signals looked like. So I've only got a few instances to show you, and it doesn't work every time. I've got one instance when it actually marked a bottom. As I said, when you get this triple 90% down day, that shows a lot of selling pressure, and it does create a short-term oversold condition. However, I think medium term, we're heading for a corrective period, and let's see why. So here's the triple 90% down day that we had on Friday, January 31st. And there you can see all three move below minus 80% for AD%, which means more than 90% of issues in each index declined. Now, so basically what we have here is we have an advance to new highs, and then we have that sharp increase in selling pressure. And if we look here in July, we had an advance, and then we got the sharp increase in selling pressure in early August. Now that did mark a low, but you can see it took 3 weeks for the S&P 500 to stabilize. And that's a sort of a correction. That's like a time correction where you're moving sideways because you're hit really hard here and you need to stabilize a little bit. And the index did stabilize and moved higher. Now, if you look here, you can see in early October, this one did not go below minus 80%, S&P SmallCap 600, 80%. So we didn't get a signal there, but we had some pretty strong selling pressure in early October, and then we got a breakout. If you look here in May, we moved to a new high there, and then we got the triple 90% down day when all three 80% moved below 80%. I know it's a bit confusing, but 80% below minus 80% means 90% of all stocks decline in each index. And that led to a correction in May. And that was kind of the garden variety correction. You know, we were up very sharply January, February, March, April, and we were entitled to a correction at that point. So let's see a couple more signals here. Here we have in October 2018, we had that sharp decline. And you can see we got a little oversold bounce a couple days later, a day later actually. We had one more day follow through and then a bounce. And then we moved sideways, and then we had another triple 90% down day in early December, and that foreshadowed this decline here. And if you look at the move off of the December lows, you had a triple 90% up day, and you had another one in January. So 2 triple 90% up days mark that bottom there. That's something to keep in mind going forward. And let's scroll down a little bit more and look at some of these other signals here. So I'm going to move the date slider to 2017, and now we can see one of the signals that didn't work. There we had a triple 90% down day. All three 80% moved below minus 80%, but this did mark a low. So it's not a perfect indicator, but I think at the very least it's signaling that we're heading for some sort of a correction. And one more to show you was the one we had in February 2018. And if you look at the current advance in January 2020, it looks like this advance in 2018 where it accelerated higher. And here we got a 90% down day in February. And that led to further weakness and then a bounce, but then we had more correction into early March. So this was like 13 weeks of correction. And that's why I think this 90% down day in all three of the big indexes there tells me we're going to head for a corrective period in the coming weeks. So as you can see, most of the time when you get these 90% down days, especially in all three indexes, that shows some seriously broad and lopsided selling pressure. Sure, it creates a short-term oversold condition that may give way to a bounce, but I think we're heading for a corrective period that would last at a minimum 3 weeks. And as you saw in February 2018, that correction lasted about 13 weeks. So thanks very much for tuning in and have a great day.